Okay, let's get started on this basics of Elliott wave. So I'm just going to put up some notes here, and we'll talk. I'll talk from those notes, and if you guys have any questions, just fire away. So you can read along with me on this thing and about the basics of Elliott wave principles. And the thing that I've always impressed me about Elliott waves is the fact that it's based on crowd psychology and pattern recognition. And I think we had a good example today when we looked at this 15-minute chart here of identifying this pattern right here. So that was pattern recognition. So what happened as far as crowd psychology happens is, people buy the dip and took some profits up here, and now we're going to have this little dip here, or have already had it. I don't know that yet. But now we're going to get some more people buying in right here. There will be some more profit taking probably near close. And that's the pattern. So we recognize that pattern if you get used to Elliott waves. And you can see Elliott believed that the upward and downward swings of mass psychology always showed up in the same repetitive patterns. And I think for the folks that have been in here for a period of time, you've seen those repetitive patterns take place. And these patterns always repeat across time and scale in a fractal nature. And a lot of things, people don't pay attention to time and Elliott wave, but it's definitely something people should pay attention to. And a lot of Elliott wave folks don't teach time. I mean, most don't. I only know that one or two that do get into time. And I don't think time is quite as precise as price, measuring price, but it can sure get you in the ballpark, and I like to look at that too. And so it says Elliott identified 5 distinct patterns that price action of any market could be broken into. And the key there is any market. We look at index trades over here and some commodities, but if you look at stock charts, it's all over the place. Some are more easily identified than others, but it is there. If we can't identify it, I just move on to another chart. It's not all charts are what I call clean Elliott wave patterns. So the patterns are either divided into impulsive, moving in the direction of largest trend. Well, as we're talking about it, this is an impulsive wave right here, and this is a corrective wave right here. So you can see that. So they're all these waves right here are fractal. That means you've got within these waves here, you've got subwaves. Let me get another chart here that shows the fractal waves in it. This is a chart I showed you guys this morning, and you can see the fractals in these waves right here. 1, 2, 3, 4, 5, ABC, 2, 3, 4, 5, a correction, and 1, 2, 3, 4, 5. Those are the fractals within the larger impulse waves going up, and your corrections in there. Impulse waves are always measured or always annotated in numbers, and corrections always use letters. This is another chart of basic pattern right here too. But what I wanted to show you on the previous one was the fractals inside of these waves right here. And there's a fractal in here, an ABC or something like that, ABC. And once we complete this larger trend up right here, we're going to have a larger ABC, and they pull back to a certain fib level. In this case, the 50 to 61.8% fib level back. So we'll pull over this next little slide here, and all this is over in the Elliott wave basics of Elliott wave section in the education portal. So this is a quote from Frost and Proctor, the guys that started all this. The primary value of the wave principle is that it provides a context for market analysis. So I think what that means is different people use different technical analysis. And I have been doing this for a while. I'm by no means what I consider an expert, but Al will use a little bit different analysis than I will. And if you wander around the trading world, you'll see everybody's got their thing that they use for analysis. And I think the important thing is whether you want to learn Elliott wave or any other kind of analysis, the thing is learn it and just stay consistent with it and don't bounce all over the place with it. So the Elliott wave principle helps us to identify larger trends. And today, this is a larger trend we're in right here. Now, it all depends on what time frame you're in, because you can go back over here in a weekly chart, and I really can't say what the larger trend is over here, or a weekly even over here. So the oscillators here are bearish. So what's your trend over here? So the way we trade and these scalp trades, we use lower time frame charts. So always keep in mind what time frame you're trading. If you're a 60-minute trader, what you want to do is if you get your trade set up, you want to enter on a 15 or 5-minute chart or even a lower time frame chart. But always pick your time frame that you're trading on and then enter on a lower time frame, if that makes sense. Okay, it also helps identify counter trend moves within that larger trend. And that's exactly what we're doing right here. That this is a counter trend move within the larger trend move. It can also be used to identify the termination of a trend. If this, in fact, is the correct count, this is the 3, and let's just pretend this were the 4 right here. We can say, okay, let's take the 1.27, 1.618, project that up, and we're going to know that somewhere in that area up there, the trend should reverse. And then we have to decide, well, what support is it going to take out to verify my assumption? So it helps you to identify the culmination of a larger trend. It can give high probability targets. And I think you've seen that a lot with this in here, where this morning, this was our target right here, 4162.68, 4164. So that's pretty close. I'll take it. So that caused us to start trailing some stops on the trade and take some profit there. It also uses specific rules of invalidation, and we will talk about that when we talk about the rules, Elliott wave rules. Okay, trading and analysis are two different disciplines. You must identify what type of trader you are before you apply Elliott wave principles to your methodology. So that begs the question, what kind of trader are you? Are you a technical trader? Do you trade fundamentals? Do you put it all together? I mean, what time frame trader are you? What kind of trade you want to trade? And I will say this about trading. I'm going to go back to the stock side. A good stock is always not a good options trade. So that's another example of you got to decide what type of trader you are. Okay. Let's go over. I want to keep this. I don't want to get too long with you guys because there's a lot to absorb. But let's go over the basic rules here of Elliott wave. And these are rules. They're not guidelines. So rule number 1: wave 3 may not be the shortest wave. This does not mean wave 3 has to be the longest wave, but it often is. So you've got a wave 3 right here, and you can see wave 1 was, you can't read it probably, but this was 53 bars. This wave 3 was 80 bars measured from here to here. Now, this could be also be 58 bars, and it would be acceptable. Now, we haven't completed wave 5 yet of this, but if this were, let's say this were 50, 8 bars and this were 38 bars, probably wave 5 is going to be less than 38 bars. That's the way you kind of figure that. So wave 3 cannot be the shortest wave. Okay, this is a really important one too. Wave 2 may not retrace beyond the beginning of wave 1. This is true of diagonals as well. We haven't talked about diagonals yet, but we'll get into that. So when we started here, wave 2 cannot drop down here, or this voids. That's one of the rules. Just one of the rules. It would void the pattern. The other, we just went over it. Wave 3 were the shortest wave in this move up right here. This would not be an impulsive wave. It's probably something like an ABC or something like that. Okay. Wave 4 may not overlap into wave 1 territory with the exception of diagonals. And we talked about this morning into this right here. And what we said, I'll move it up. We had 1, 2, 3, a possible wave 4. So what happened here? It's into wave 1. So this pattern was invalidated, and this probably most likely invalidates the bearish assumption that this is not an A, B, C. There's something else going on. This is probably wave 4. This is your 1 up, and this is your 2 down. So this is turned into a bullish pattern most likely. So wave 4 may not overlap into wave 1 territory with the exception of diagonals. And we'll talk about diagonals at a later time and date. Diagonal may never be a third wave. They may only occur in first and fifth waves. Okay. So if this is a diagonal coming up, this can't occur in a third wave going up. If this is a 1, 2, this cannot be a diagonal third wave right here. We're looking at on this chart here. This cannot be a diagonal. Every impulse, and by the way, these diagonals, if they're in the first wave, they're an ABC or ABC. If they're in the fifth wave, they're an ABC. Every impulse must contain an interval wave structure that subdivides into separate and complete 5 waves. And we've showed you guys that, with the fractals. Everybody get that? Okay, question. Well, Paul, if you're trading futures, yes. If you're trading cash, no. Well, the rules on the trading page, yes. They're in the educational portal. But back to Paul's question, I mean, it's just like when you're trading stocks, you don't include overnight data, you don't include cash. So, a lot of times people will they try to reconcile, for instance, cash, SPX, and futures trading, and it's funny how sometimes they don't reconcile with each other, and you just have to trade each one separately. But you like it when they do. Rule 4 one more time. A diagonal may never be in a third wave. They must only occur in waves 1 and 5. So, let me see if I can find an example of that. Okay. I'll give you an example. This is wave 1. Let's say this is wave 1 up. This is wave 2 down, and we're working on wave 3. Okay. So if price went all the way down here to and violated this wave 1 and closed below this wave 1 high right there, that would be a diagonal. So, but you can't have a diagonal in wave 1. Or excuse me, you can't have a diagonal in wave 3. If you have a diagonal in wave 3, something else is going on. It's not an impulsive wave. And if a diagonal occurs in wave 1, it's a leading diagonal, and they're usually ABCs. And the fifth diagonal, they're usually ABCs, and they're an ending diagonal. Now, one thing about diagonals, I just kind of bring it up right now since we're talking about it. When those things end, price, if price is going up and you have an ending diagonal and you get to the top of it, it's going to fall hard. And let's say this were an ending diagonal coming up into here. Chances are price is going to drop below to where the ending diagonal started. So let's review them one more time since they're so important here. Wave 3 may not be the shortest wave. Does not mean it cannot be it has to be the longest wave, but it often is. Wave 3s can go on for a long time. Wave 2 may not retrace the beginning of wave 1. Wave 2 cannot drop down here. Wave 4 may not overlap into wave 1 territory. This wave 4 down should not go down into here. And we talked about diagonal may never be in the third wave. They may only occur in first or fifth wave positions. Every impulse wave must contain an internal wave structure that subdivides into separate and complete 5-wave patterns. Like this. Complete 5-wave pattern. Impulse. Correction. 5-wave pattern. Correction. Impulse. So those are your basic rules of Elliott wave. Those are the things everybody has to learn before you, well, you just got to learn them. And after you do this for a while, you'll see that. So let's talk about, these are rules, and let's talk about guidelines. Okay. Corrective waves often retrace to the previous fourth wave of one lesser degree. So this would be, I'm just going to say this, put it like, and label this like this. Today is not a good day because I can't figure out what these wave 4s are. Let's say that, I'm just going to put this on here. Let's say this was a wave 4. And I'm counting up. Let's just say right here is a wave 4. And notice I have it labeled with a green 4. It's in the wrong place. So let's say this was 3, 4, and this was sub 5. Change it so you guys can see it. It's hard to pick these waves out today. Okay, so we're computing wave 4 right here. So this is 1, 2, 3, 4, 4 of a lesser degree, because my primary wave right here is maroon. So I'm counting off subwaves within this wave, and that's the wave 4 of a lesser degree. I want to look at this oil chart real quick. There might be one on there. Okay, here's a gold chart. A better example for you guys. Okay, this count right here is 1, 2, 3, 4, and we're going to compute the fifth wave up here. 5, and this is going to be 3. So 1, 2, 3, 4, and we're computing this last wave right here. Five fractals in this last 5 waves up. 1, 2, 3, 4, 5. So now we want to compute where wave 4 is. So this is what it's talking about here. this is a live GDX chart. That's the wave 4 of a lesser degree. Okay, you guys see that? This is a live GDX chart. So 1, 2, 3, 4, and we're going to, this is the wave 4. So chances are for this wave 4 pullback, this is where it will end up. Okay, this is an oil chart. So 3, we're solving for wave 4 here. So this is your A, B, and this is your probably your wave 4 right here of a lesser degree. That wasn't a good example either. Let me see if I can find something else. But anyway, I don't want to waste too much time on that today. But you guys understand what I'm saying there? And we will certainly show you those as they come up. Waves 2 and 4 of the same degree are rarely the same type of corrected pattern. And we talked about this. This is known as the guideline of alternation. So if, and this is not a good example today, but if this were A, B, C, this is going to be a complex correction. And if this were a complex correction, this is most likely going to be an ABC, a zigzag or something like that. So whatever this is going to be the opposite. Okay, triangles are rarely found in the second wave positions by themselves. So second wave position, you normally wouldn't find a corrective triangle. Okay? If you had a triangle right here, you're usually not going to have a triangle in this. Wait, I do have it. I knew I had it somewhere. You're not going to have this pattern right here in your second wave. You're usually going to have triangles up here. And a triangle is going to be something like an A, B, C, D, E, pulling back into that last fourth wave of a lesser degree. So the principle of alternation. Okay, wave C in a correction most likely extends to a length equal to wave A of the same degree. So right now, this is your wave A, this is B. So if we measure down from here to the top of here, that's the equal length right there. Simple ABC pattern. So that's a guideline. That one works a lot. Okay, the fifth guideline, only one wave of a 5-way impulse pattern will extend, and it's usually wave 3. Okay, an extension means the typical pattern, this should be a fractal, 5 waves, wave 3 should be a fractal, and wave 5 will be a fractal. Of the 3 impulse fractal waves, only one will extend past the normal guideline target for that wave. So if these two have not extended, and they haven't yet, this one did not, and this one only got up to the bottom of the target of 1.31A, there's a good chance that wave 5 will extend past the typical wave 5 pattern. So that's just something to keep in the back of your mind, a basic rule, a guideline rather, that these things do. So no extension here. This one did not extend so far, unless this is a minor 3, minor 4 going up here, and this thing takes off. But that's a guideline too that you should be aware of. Okay. Wave 5 of an impulse often extends to the length equal to wave 1. Let me read that over to you. Wave 5 of an impulse often extends to the equal length of wave 1. Okay, so how would we see if that were true in this case? So what we're going to do is get our handy dandy extension tool out, and we're going to measure wave 1, and we're going to take it up here and measure it from the bottom of, let's just pretend this is wave 4 right here. And I don't know if you can see that or not, but it came in right over top of the 1.168 target for this wave 5. You guys see that? Yeah, I know you love those wave 4s. But anyway, you can see how that thing, I mean, that's amazing. I didn't make that up. I just did it while we're sitting here watching this. So I measured from the top of this, and I took it, and I measured from the bottom of this, and it came right in at the 1.618 target right here. Wow. What do you call that, karma? Okay. Wave 2 often retraces 50% or 61.8% of wave 1. And as a matter of fact today, look where it retraced to, guys and ladies. 50% of wave 1. So, put the basic guidelines up. Do you guys have any questions about these? Put the rules up again so you can see them. So anyway, if there's no questions, that is the conclusion of this little mini presentation, fireside chat. So if you have any questions, just put them up there and we'll get to them as they come up. So thanks for listening.